I think it's been a tough year. What it highlights is that our market has been pretty extraordinary. We're likely to see shorter holiday periods, and I think that 2021 will defy expectation. We've seen that in 2020, but I think next year we'll continue to see that.
You're listening to Elevate, the official podcast of Elite Agent for real estate industry sales professionals, property managers and leaders. With thanks to our partner Connect Now, Elevate brings you the best tools, thinking and strategies to elevate your results. To download your written action guide from this podcast containing extra tips, links and shortcuts, visit eliteagentelevate.com. And for more information about how Connect Now can make moving easier on your clients, visit connectnow.com.au. Here is your host, Samantha McLean.
Welcome to another episode of the Elevate podcast, where we delve into some of the most interesting minds in business and in real estate for the very best tips and strategies for you to implement to elevate your business. I'm Samantha McLean, editor of Elite Agent and host of today's show. Today I'm joined by Domain Senior Research Analyst, Dr. Nicola Powell. Nicola is the leading force behind Domain's data reports and is a well-known property expert featuring regularly both in Elite Agent and plenty of other media, as well as Domain's media channels. So welcome to the show, Nicola.
Thanks for having me on, Samantha.
Obviously, we're going to take a bit of a deep dive into the data, but I just want to say we're big fans of your property reports here, and particularly the market updates that you provided through COVID. What has this year been like for you and the team at Domain?
It's been a very unique year. I think what we saw in terms of what we would tend to use as kind of leading market indicators did change. And what we did is we just stopped, we paused, we looked at what we were doing, and we started to try and cut statistics in a different way and look at the market in a different way. So during kind of the height of COVID lockdowns, we introduced a number of different new statistics, which can only be found on Domain. So one of the things we did was price edit. So this looks at live listings and the level of discounting and the proportion of listings that were seeing an actual discount. And as you can anticipate, that bounced during COVID. And what's interesting with this stat, it's really timely and is actually correlated to price movements as well. So it gives a really kind of on the ground lens on what's happening in the market.
So what are you seeing now compared to what you were seeing back in April, May, June when you first started reporting those numbers?
Yeah, so the bounce that we saw in this price edits data set, it did bounce during kind of April, and it was actually really quite quick, the bounce in the amount of listings seeing their asking prices revised downwards. And I think it really reflects kind of the sentiment that we were seeing, because obviously during that period we saw consumer sentiment dive. The vendors were reacting to that. So they were adjusting their price expectation because there were so many unknowns in the road ahead for real estate and obviously the overall economic health of Australia and the globe. But what we have seen now is that has declined. We're seeing less listings, seeing their asking prices reduced. And I think, we have seen sentiment come back into the market, and that's really highlighted by the consumer sentiment that we've seen coming out.
Everyone feels like they're very upbeat at the moment, and the market is looking quite good at the moment. Is that what you're seeing as well?
Yes, I do think so. What we saw in terms of the impacts of COVID, it was concentrated towards Sydney and Melbourne. We saw prices fall more so in Sydney and Melbourne than the other capital cities. But I think now that we've come out of lockdowns and Melbourne is obviously emerging from that hibernation, we are starting to see the markets track back. We're seeing strong clearance rates in Sydney and Melbourne. And considering Melbourne's only just come out of that lockdown period, in November, their clearance rate was 67% for the month. Sydney's at 69%. And we're seeing kind of listings rebound as well. I was just only looking at our listings, and, many of our capital cities are actually seeing higher levels of new listings coming onto the market compared to this time last year. And really for units, it's across most of our capital cities. For houses, it's across kind of Sydney, Melbourne and Perth. We're still seeing an elevated level of new listings.
That's interesting, because I know that there's a lot of agents out there that have struggled with the low volumes of listings this year. I know we're not fortune tellers, but data does tell a pretty good story. If you were to sort of think about moving into 2021, do you see that trend continuing?
I mean, the low level of listings was certainly a hard and challenging time for the industry. What that did is actually support prices. So it was overall good thing for the market. We saw that pullback in listings. What we're seeing now is, particularly coming out of Melbourne, that pent-up supply that built during those stage 4 lockdowns. The rebound was almost instant. We've seen those new listings track back onto the market. What we are still seeing is many of our cities are higher compared to this time last year. And I think particularly for Melbourne, what they're likely to see is a much shorter holiday period. I think we'll continue to see auction numbers push to the latest deadline towards that kind of holiday period. But even kind of new listings, I think we'll still see them fairly robust. And look, who knows what will happen next year? I think there's lots of hurdles for us to overcome next year. But I think when we have a look overall at everything that has happened, putting all of those statistics together, I do think that the outlook looks pretty good for property. And I think that we will continue to see those new listings tracking higher into early next year.
I mean, this has been interesting because at the height of lockdown, or even thinking back to April or May this year, and I've been doing a lot of summarising of the year, trying to go over so much has happened. And I remember the banks at the time, they were all full of gloom and doom as well, worried about the market. And I think Harry Dent came back at one point as well, saying property Armageddon and talking about bubbles and things like that. But I saw a story on Domain just last week, actually, which said the Armageddon never happened. Do you have any logic or reasons as to why it's been so strong?
It really did highlight how resilient our property markets are. And when you have a look at, say, the historical price series, property prices in Australia have actually fared relatively well against economic shocks. When we have a look at, say, major share market losses and recessions that have happened, it doesn't necessarily mean property prices will fall. And what we have seen in the past is those significant economic shocks that we've seen in Australia and global, it has impacted our property markets in very different ways. I think, the best comparison that we can do, because we did go through a COVID-induced recession, if we compare that to the recession that we saw back in the early 90s, we saw property values decline during that period around 4 or 5%. And even in the GFC period, where Australia's economy was much more globalised, the slowdown in global and the Australian financial sector did impact both employment, incomes, and also borrowing capacity. And even then, during the GFC, we saw prices for houses in our time series, they fell about 5% and units fell around 2%. Now, when we put it into context to what happened in the GFC, I think, we have seen remarkable resilience. I think there's a number of reasons for that. We are still seeing a bit of property price falls compared to pre-COVID levels, particularly in Sydney and Melbourne, but they have been very minor. And I think, it's because we have seen historically low interest rates, a number of interest rate cuts. We've seen that supply level, that low level of supply really helping to support prices. We pull back in buyers, pull back in sellers, but also government stimulus. I mean, really the government came out all guns blazing. They really did want to support the economy. They've looked at the bigger picture. We've got mortgage holidays as well, which have really helped to support homeowners that have been economically impacted by COVID. But also, when we have a look at the kind of impacts of COVID and who has felt it the most, it really is skewed towards the lower demographic or the younger demographic, and the lower income households. So that said, it really highlights that those people are most likely to be renting. And the biggest disruption that we have seen is in the rental market. And there are still really key areas that are still suffering the impacts of this, where we've seen huge disruption in rental. But sales market, in terms of property prices, has been remarkable, really.
So let's talk about the rental market for a moment, because that has been interesting this year. And I mean, we'll move on to the regions in a second, but what are you seeing in the rental markets around Australia at the moment? I mean, look, let's kick off with Sydney and Melbourne because they're the most populous cities, but I wouldn't mind just going around the grounds if that's okay.
Yeah, absolutely. So Sydney and Melbourne, what we have seen in terms of their rental prices is that houses have seen rental price growth in both of these cities. I mean, the trends are actually quite similar, so we can kind of group Sydney and Melbourne together. Houses have seen growth in their rental prices where units are still falling. It's interesting when we have a look at vacancy rates. So our vacancy rates are up until the end of November, so a really kind of a recent insight. When we have a look at the highest vacancy rates across our capital cities at a sub-level. Victoria or Greater Melbourne dominates those. So we've got Melbourne CBD, the vacancy rates at 14.4%, which is extraordinarily high.
Yeah.
And then when you have a look at, say, the top 10 areas by SA3, we are seeing Greater Melbourne areas coming up as the highest vacancy rates, which is what you would expect because they're coming out of their stage 4 lockdown. If we look at all of our capital cities together, we are seeing greater weakness in our CBD areas, more so in Sydney and Melbourne, because they have a greater exposure to overseas migration and they have a greater exposure to foreign students, international students. And obviously, those international border closures are going to stop our rental markets really returning to normal. But I think those points of weakness will continue to be Melbourne CBD, Brisbane CBD, Sydney and Adelaide also has quite a high vacancy rate as well.
So it's not just people saying, I don't have a big enough balcony or a home office. It's actually being greatly impacted by the lack of foreign students and the lack of holiday makers and other people that are, usually investing in Australia.
Absolutely. I mean, what we saw, particularly during the pandemic, was we saw a bounce in vacancy rates, particularly in the CBD areas, which have a greater exposure to overseas migrants and international students. And most of those do rent upon arrival, and also holiday areas saw a bounce in vacancy rates. But we're seeing a bit of a reversal of that at the moment because those vacancy rates in our holiday areas have declined. And I think probably the impacts of different things helping to tighten our holiday areas. Working remotely is probably one of them. I think some people have said, I'm going to leave these big cities and I'm going to go and work remotely in a lifestyle region. But also I think we're travelling again. We're going to travel in Australia. So I think those holiday areas are going to be benefiting obviously from that change in where we're going to holiday.
So let's talk about the regions, because I know a lot of agents who are regional and they've just said that it's gone nuts, being a technical term, obviously, nuts being a technical economic term, and that, that they just don't have the stock for either rentals or particularly in places like Perth. In WA at the moment, which is the surprise packet of this year, I think, is they've got no rental stock. It's the lowest vacancy on record. And also, prices are rising over there. So maybe let's go backwards a bit this time and start over in the West. What's the data showing you over there about the regions?
Yeah, remarkable. I would use the word nuts too. It's been amazing, I think, for WA because, WA has really struggled with a multi-year downturn post that kind of resources boom. But I think what we saw even prior to the pandemic, it was hitting the bottom of the market in terms of prices. And I think that was more or less hit late last year. And we were starting to see green shoots come into that market. What COVID did is it did send a bit of a curveball into that market. We did see prices wobble slightly, and even in the rental market. Since that strict lockdown period that WA experienced early on, I think what they have benefited from is border closures have meant that fly-in, fly-out workers haven't been able to do that kind of fly-in, fly-out work. Many of those families or individuals from the East Coast have actually relocated permanently. And it's really interesting when you have a look at those regional markets, and particularly around those mining towns where rental prices are growing, sale prices are growing, because many of these resources towns to purchase compared to the East Coast, it's cheap. So I think some of those families or individuals, couples are choosing to purchase, and it's really helped to tighten that market. And I think, when we have a look at where our focus is going to be in terms of the star performers in the next few years, I do think Perth in particular is going to be one of those markets. I think investors are already starting to look upon those markets. What you tend to find on the ground is those areas of higher price tend to start growing in property price, start recovering, in terms of their prices sooner than the lower end of the market. And that's because owner occupiers on the ground see that opportunity. And obviously they're supported by low interest rates as well. So we're already seeing late last year some growth in the higher end suburbs of Perth. So I think that's going to continue. I think that market it's a long road to recovery compared to what it was at its peak. But I do think it's hit the bottom, and I think that recovery is now underway.
Good news for those guys who have badly needed some good news after all those years of, feeling like it was not that great.
Absolutely. And I think particularly when you look at the housing finance coming out of WA, we're still seeing an increase in housing finance, particularly the finance towards those constructing a new dwelling.
Okay, so speaking of, there are other areas of Australia at the moment, like, for example, far north Queensland and regional New South Wales, places like Bathurst. All of these places, again, agents are sort of saying that it's so busy, and now some of them are saying that there's likely to be a bit of a rental crisis in some of these popular regional areas because of this great regional migration. How do you see that playing out in some of the more, like Gold Coast, for example? How do you see that playing out in some of the more popular regional areas?
So there's definitely high interest in our regional markets. And I think it's really evident when you have a look at the movement of residents from our biggest capital cities into those regional markets. And when you have a look at, say, rental price growth in some of our biggest capital cities, the further away you get from the CBD, the greater the rental price growth. And then obviously when you flow out into those regional markets, what we found in terms of rental growth is that the regional markets have outperformed their respective capital city in New South Wales, Victoria, Queensland, WA and Tasmania. So that's like the majority of our states and territories. But when you have a look at, say, performance of our regional markets, regional Australia has outperformed the respective capital city markets based upon kind of cyclical patterns. And what you tend to find is that the cities do have greater volatility in price. They have bigger upswings and deeper downturns compared to the regional markets, which have more kind of softer performance of their rental and their sales market. But I think when you have a look at, say, the migration of residents, and that's what's interesting because the ABS have been quite reactive to COVID and they've released new stats to help us understand the changes in population flows during COVID. And they did a special release of population growth and the flow of residents from cities to those regional areas because otherwise, we wouldn't have got this data till I think it was like early next year. So it's kind of really timely data to kind of help us understand, is this actually happening? Are we seeing residents moving away from our bigger capital cities? And what they saw in terms of that movement from cities to regional areas, it was a record low in terms of net internal migration. So what we're seeing is an additional shift in residents from cities to those regions, and that is placing additional demand on housing. I think it is contributing to a better performance of our regional markets, but I think it will certainly be concentrated to, as you said, those real popular markets. So Southeast Queensland areas have always been one that I've thought that is going to be kind of a winner out of the pandemic and see strong performance in their rental markets. Coastal areas, tree change areas. I mean, we were seeing this occurring prior to the pandemic anyway. And I think that's important to note that we were seeing the shift away from cities in terms of rentals, in terms of sales anyway. And that was mainly because our biggest capital cities had become so unaffordable. But what we've seen, I think, from COVID is accelerated that trend. So we're seeing a greater movement of people away from our biggest capital cities. And that's because we've finally cottoned on to the fact that we can work from home, which I think we would have cottoned on to this eventually, but it's almost been fast-tracked because of the pandemic. It's forcibly introduced working from home, and it's made businesses realise that actually people are productive working from home. It allows us to have a better work balance, and I think we're likely to continue to see that. And I think we will continue to see a shift. I think some people are probably only just having that conversation with their employers. Can I work remotely? Eventually, we'll probably see more people move to these popular regional areas.
Yeah, completely agree. I interviewed Lisa Messenger, who just put out a book called Work From Wherever before the pandemic, and she was saying this is the next big trend, and we were kind of seeing it. And then it's almost like having the pandemic just tip Kero onto the trend, and now everyone wants to do it.
Absolutely. I also wonder what it's going to mean in terms of what we want from our homes, because We have used our homes very differently in 2020. When I think back to the chaos in terms of peak lockdown periods when I had 2 young kids running underfoot, it made me even look at my own house differently. And even from kind of an architectural perspective, are we going to want different things from our home? Features, attributes of the home, the layout of our home. Are we going to want to have more segregated areas? Because we've shifted towards very open plan living. And I do wonder whether that's actually going to pare back slightly.
It's interesting too. I started thinking about my kitchen because I didn't want to order Uber Eats anymore. It's just little things that don't really occur to you that this pandemic has highlighted.
Yeah, absolutely. And we've even seen that in search behaviours online in terms of what prospective home hunters are actually looking for. So the use of the word home office was never really used before, but during kind of peak lockdown periods, particularly in Melbourne, we did see an increase in the use of home office. Study is used far more frequently. But we've definitely seen a change in kind of what people are searching for. So some of the biggest increases over that pandemic period compared to this time last year were things like rural, sea view, some of the other things. So I'm scanning down my list, acreage as well, which all points to that regional discussion that we were having just a moment ago and supports that people are exploring where they can live and what they can probably buy versus what they're currently, living in and what they could sell their current home for.
Yeah, it's interesting too. I mean, feeding into that is a trend at the moment that pets have boomed this year as well. So people actually want to have a pet because obviously staying at home, if you're home alone, at least you could have the company of a nice mutt or moggy.
It's really interesting you say that, Samantha, because one of the top keyword searches is pets allowed. And that really talks to, how important having pets are. And it's really interesting that pets allowed comes up in both rent and sale. And I think one of the things probably driving the pets allowed in the for sale sector is probably the apartment market and making sure you're buying into a building that actually allows you to have your furry friends with you.
Such a hot topic at the moment. This is fun because we get to ask you all the questions about all the things all at once. But first home buyers, big year for first home buyers as well. Are there any particular areas that you're seeing at the moment that are popular with first home buyers?
What we've seen in the past from first home buyers is affordability has definitely pushed them further afield from our CBDs, particularly Sydney and Melbourne, and into regional markets. I mean, we were seeing that prior to the pandemic, and it kind of ties in with that other conversation. What we have seen due to COVID is it accelerating that. I think probably more first home buyers are not doing the compromise and moving closer to a CBD and have a smaller home. They're deciding to actually relocate to either outer suburban areas or those regional markets. And, I think first home buyers, there's flip sides to it. So first home buyers are facing rising prices at the lower end of the market, and we've seen the majority of our cities actually increase in price at that lower end. But I think first home buyers are being supported by a number of incentives, both state-based and federal, and obviously historically low interest rates. So, they have stomped back into the market. They've obviously got reduced competition from foreign buyers and investor activity. And I think many of them are actually utilising this time to actually make their leap onto the property ladder.
We're reading reports also of people thinking about not renting straight up anymore. Maybe that is as a result of more cash in the economy, people being able to access their super. All of a sudden, they've got a deposit that they didn't know they had. And I'm guessing that that's impacting things as well.
Yeah, absolutely. And I also think lockdown has also created a bit of forced saving for us all. I think we're all a bit mindful, even now that, we're, emerging from lockdown and restrictions have eased. We're certainly not doing as many things as we used to. The number of friends that I have with children in their kind of early 20s where they're not going out, they're actually saving quite a bit of money. So I think it's helping fast track that lump sum deposit goal for first home buyers, which I think is a great thing. If we're getting more first home buyers into the market, I do think it's a great thing. It takes such a long time to save a lump sum deposit. We had our first home buyer report this year, and that looks at how long it actually takes for a first home buyer to save that all-important 20% deposit. Now, this was based on a couple of that age that are more likely to buy on their first home, so 25 to 34 years old. Now, in Sydney, to save 20% for an entry-level house would take 6.5 years for a couple, which is a very long period of time.
Yeah, that's a lot of time without holidays or, you know, those sorts of things. Yeah.
Yeah, it totally is. And I think that had increased compared to this time last year. What you tend to see is when you see kind of first home buyer incentives come into the market, what that means is it increases first home buyer activity, increases competition, and it also drives up property price at the lower end because first home buyers are ultimately competing against one another. And that's more or less what we've seen. So entry level prices have risen. It's particularly stark in Melbourne. In Sydney, we've definitely seen prices at the lower end rise, but actually the very top end, the 95th percentile, so the very elite sector of Sydney's market, has by far been the standout performer over the last year.
So we're going to leave some links in the show notes to all of these reports that we've been talking about, the first home buyer report and the rental report and the house price report. And there's a lot of information in all of those for anyone who might be listening right now, and we encourage you to download them all and have a look through them. But let's go to some advice perhaps for agents. If you're talking to vendors at the moment, sellers, what sort of advice would you be giving to agents in having conversations with sellers?
So I think, the market is definitely strong in many of our capital cities. Particularly what's interesting is the conversation around state auctions. And one of the trends that we've seen is many vendors are actually securing a sale prior to auction. And that is in all of our big auction markets, so Sydney, Melbourne and Canberra. I'm kind of jumping around in this conversation, but I think what we have seen is some vendors are wary about listing their home for sale. What we've learned this year is how resilient our housing market is. That would be one of the key things I would be talking to vendors about. And I think, we keep talking about this fiscal cliff that's occurring next year. And when you have a look at the different areas, the biggest risks are really within our CBD market. We're seeing high levels of demand for outer suburban locations, for our regional markets. And I think for an agent talking to their vendor, it's really breaking down the data into a consumable manner that's particularly relevant for their particular area. The risk to prices and wariness will certainly be centred around our CBD markets. But I think overall, the outer suburban, the regional areas are performing very well. I think some of the conversations, and I started talking about the auction market, many of our vendors are actually securing sales prior to auction. We're almost seeing a match between those sold under the hammer versus sold prior. And when you see a high level of auctions, homes being sold prior to auction, it indicates a market that's on the move. And I think that's what we're seeing in terms of, in a positive nature, is on the move. And I think buyers are actually putting in those robust offers prior to auction. They don't want to miss out. I think that also speaks to the low level of listings that we're seeing coming onto the market. So I think the competition is there. And I mean, we're not seeing prices at a peak in Sydney and Melbourne compared to what they were, but they're not far behind that peak price.
And what about buyers at the moment? I mean, obviously the other flip side of that conversation is that if you're serious about buying somewhere, you've got to get in quick.
Look, I do think that is the case. Firstly, for first home buyers. First home buyers really need to do their research. They need to apply early and see what they're eligible for, because there's so many different incentives at play. So they need to apply early, see what they're entitled for, to actually see what benefits they will get. And that will help them determine what their price point is. Upsizers are really being supported by low interest rates, and many of them will be supported by huge amounts of capital gain in their current home. So I think what we're seeing, particularly in the upsize market, it's an owner-occupier rebound in prices is what we're currently experiencing. So I think for those looking to upsize, there is competition in the market. And I think it's about being realistic that if you do find that perfect home, it's not waiting and it's putting in a robust offer. Because if you found that home, I think it's just making that move. Even if it's going to auction, don't wait for auction day.
And what about investors? If you're a property manager dealing with an investor right now, what would your conversation be around?
Look, I think for the investor market, it's a hard market. And I think it depends upon where their investment property is. I think our CBD markets are some time away from coming anywhere back to normality. The challenge is having around those conversations around an appropriate rental price. We have seen a change in rental price in our CBDs. Vacancy rates are higher, but any investor that's got a property in outer areas, some of those, for example, Mornington Peninsula is one of the tightest rental markets that we're seeing. The vacancy rate is extraordinarily tight. So I think an investor in the outer burbs are much better placed and will probably be seeing their rental prices rising. Inner city is a different beast, really. Then it becomes a conversation, and this is where it goes back to our conversation around, my concern for CBD markets. If we start to see investors that actually can't get a tenant, then they're not able to, they're coming off mortgage holidays, they're not able to actually get that tenant. That's when we have that risk of a heightened level of distressed selling, and that's where we see a greater risk to prices in those particular areas.
Yeah, interesting, and definitely something that you'll be watching out for, I'm guessing, in the new year as you're going through the data.
Absolutely. And, distressed selling is something that we are tracking, and we haven't seen a lift in distressed selling. It's actually declined slightly, but that's what we would expect because we've got mortgage holidays supporting people through this period. We've obviously seen many of those end in October, and then it's kind of reevaluated on a case-by-case basis, but they will come to an end early next year. But as I said, the greater risk is CBD areas. And I think if we see distressed selling in heightened levels, in high numbers, in small areas, that's when we'll see more substantial falls to prices.
Yeah, interesting. So let's say, based on the data, let's just say you and I win lotto this week and we win $1 million and you're thinking about where we should buy. What would be your top pick of like a place to own?
So, I do think it depends upon circumstance, and I'm very risk adverse. So I would be picking a very owner-occupier-led market. I wouldn't be going for your typical investor market. So I would be chasing the capital gains more so than the rental returns. I think if I'm going to pick a market that, well, first of all, a steady player, for those looking, for the steady returns. But for, steady capital growth would be Canberra and Adelaide. They are always our steady performers. They avoid big swings. But I think those markets, I'd probably be purchasing in Perth. I'd be purchasing in a really kind of family-orientated, affordable area because I think that market will start to see some stronger gains.
If we had $1 million to invest, based on the data that you're seeing now, where should we put that money if we're looking for a good long-term tenant that's not going to cause us any trouble?
So you want a long-term tenant that isn't going to cause any trouble?
Or an Airbnb where we're going to get a lot of trouble, but the return's going to be great.
So, in terms of those rental markets that are, really tight, I would be looking to those more holiday locations, areas like Byron Bay, Noosa, which have always been typically that kind of, heartland for good rental returns. They would be the market that I probably would have where I'd put my money.
Yeah, that's because all of Hollywood's there right now, right?
Absolutely. Byron Bay really has been extraordinary performer. I think particularly with working from home, I have heard that a lot of Victorians moved to Byron Bay. That would be a great luxury, I think. But I think, in these times, I think we have seen a shift. And I think Byron Bay has definitely been reaping the benefits of that.
And it has all those Hemsworth brothers now too. Let's not forget that. So, Nicola, it's been wonderful talking to you about markets going nuts and Hemsworth brothers and everything else that we've covered today. If there was one thing that you'd like to leave agents with about, like what you're seeing for 2020, what would it be?
I think it's been a tough year. And I think what it highlights is that our market has been pretty extraordinary. And I think that we're likely to see shorter holiday periods. And I think that 2021 will defy expectation. We've seen that in 2020, but I think next year we'll continue to see that.
Yeah, I'm sure there'll be a lot of people that are quite happy to hear that, particularly as the industry has had such a challenging year.
Absolutely. It really has been.
Dr. Nicola Powell, thank you so much.
Thanks so much for having me.
We hope you enjoyed this episode of Elevate, with thanks to connectnow.com.au. Don't forget to download your written action guide from this podcast containing extra tips, links and shortcuts. Visit eliteagentelevate.com.